Now it's just looking for a table, yeah.
So good afternoon, everyone, and welcome to this panel discussion. This panel discussion is about thematic bonds, and by thematic bonds, we are referring to green bonds and catastrophe bonds, two completely different types of financial instruments. One raises money, the green bonds, and the other is not really a bond, it's an insurance instrument. As some of you may know, green bonds are bonds that whose proceeds are earmarked to finance environment-friendly projects, whereas catastrophe bonds, as I mentioned, are issued in order to help countries or entities buy protection against natural disasters, etc. So it's a risk transfer instrument. So my name is Farah Hussain, and I work for the World Bank Treasury, obviously. And my department is the Client Services Department. What that means is that we work with our clients to identify financing and risk management challenges and help them implement new and innovative financial solutions to help them meet those challenges. And each of us are an expert on a specific topic. I work primarily with green bonds, and I have my colleagues here, Abigail Baca and Antonio Davila, who work on disaster risk financing. So they'll also be helping with this panel discussion with some of your questions. So in today's panel discussion, we are going to talk about, how debt managers are using these instruments, and what are the strategies they can adopt, and how these instruments can actually impact the strategies that they have, the medium-term debt management strategies, etc. And in order to help me with this discussion, I have three very distinguished speakers. First of all, I have Robert Zima, who's the Director of Public Debt Management at the Ministry of Finance of Poland. And then I have Jose Andres Olivares, who is a Director of the Directorate of Financial Markets Management in the Ministry of Economy and Finance in Peru. And I have Christopher Kamenker, who heads the Sustainable Finance Research at the investment bank SEB and provides sustainable finance advisory to corporates, investors, and the official sector. So what we're going to do first is we're going to go through presentations by each of these speakers. And then after that, I'll throw open the floor for questions from you, and I'll also be asking them questions. So without further ado, I'd like to ask Robert to start with his presentation. The green bond market has been growing tremendously, but the sovereigns have really got into this market very recently in 2016, and Poland was actually the first country that issued a sovereign green bond. So Robert, without further ado, if you could tell us more about the transaction through your presentation. Thank you.
Thank you, Farah. So actually, you already said what I wanted to begin with, so that there's no coincidence that I'm the first speaker during this session, because Poland was the first country to issue the sovereign green bonds, and I wanted to briefly show you how we did it. Well, Poland was not the obvious candidate to be the first to open the sovereign green bond market, but as it turned out, it was a very successful project. I will show you the presentation, a few slides, and then I think at the end I will also make some I would say practical comments on that process. So. Our first thing we had to do was to prepare the framework, the green bond framework, and it was prepared according to green bond principles published by ICMA at that time. We also hired a third-party advisor, which was Sustainalytics, and the whole process was not only the verification of the framework, but also the preparation itself, and everything we did at the time was done in cooperation with them. And the framework is based on the four pillars, four major elements we wanted to include. First, of course, is the use of proceeds, so what the funds will be spent on. Then how we select the projects and how we evaluate if they conform with the green bond framework. Then the management of proceeds is a more or less, let's say, technical thing on our side. How we actually do it, because we have opened a separate dedicated account where only the green bonds proceeds are transferred and deposited, and they are withdrawn from the account only when the payment for a specific project is done from the state budget. And the last pillar was the reporting, and reporting is the toughest part, of course. We are able to show exactly what we have spent money on, exactly which project. For example, if this is, let's say, clean transportation pillar, so for example, renovation of some old railway tracks, we can say exactly the kilometer 122 to kilometer 150 or whatever was changed. This and this amount of money was spent from this date to this date. This is all very clear. But then there is a problem to actually say how much CO2 reduction was done because of that. This is also the case. The situation is similar in case of other projects, other pillars. So in the first report, what we did, we reported. Well, actually, I skipped some slides already speaking about the reporting, but this is the most now for us the most important and most complicated thing. So let me just get back to the presentation, and I will speak about reporting in a minute. So eligible sectors. We have 6 eligible sectors in our framework, for which the green bond proceeds can be used: renewable energy, sustainable agricultural operations, afforestation, national park, clean transportation, and reclamation of heaps. We also have in our framework ineligible sectors, to be clear, absolutely clear with the investors that the funds will not be spent on the projects which are not really in line with the green bond principles. So we made clear that we will not spend on those. It was, let's say, implicitly clear, but we prefer to be on the safe side here and to mention all of those to make the comfort, to make the investors even more comfortable with our offering. And I think in this particular bond segment, the investors' confidence and comfort is much more important than in the regular bonds sectors. So very briefly, how we select the projects, because at the very beginning, I mean like 5 years ago, when we first thought about sovereign green bonds, we were very skeptical. We simply said no, it's not doable. First, because we were not able to earmark the funds according to public finance law we had at that time in Poland. We had to change it. Changing the bill on public finance law is not an easy task, but it was the first obstacle we have to overcome. Then the second, that managers are not, at least in Poland, are not expert on environmental finance or environmental policies, climate changing research, etc. So we needed knowledge and expertise of other ministries. So we had to convince them that yes, this additional effort is really worth it. But fortunately, we have in the ministry department which is coordinating the budget preparation process with other ministries, like Ministry of Energy, of Environment, of Agriculture, Culture. So this dedicated department, they basically know everything what they are spending money on. So it really helped because we already knew we had the list of the projects which might be eligible under Green Bond framework available at the Ministry of Finance. So it was a massive step forward in the whole process. So and around this we built the whole selection process. So basically we have this department. They know what other let's say green ministers are spending money on. They know the projects, if there are any doubts, if it's really green, or because they just consult with the ministry, and then we, I mean the public debt, we reconcile everything with Sustainalytics again. We hired Sustainalytics for the first reporting, and every project was also verified by them that the project does meet the green bond, our framework, and also principles. So let's skip this analytics and let's move to our first issuance. It was done in December 2016. 5-year bond, 750 million. Pricing was in line with our regular euro bonds. It wasn't. There was no price benefit. No, it was priced exactly at our regular green bond, our regular euro bonds at that time. So we didn't expect any let's say pricing advantage at that time, and although some banks were showing us that potential benefit may be up to 5, up to 10 basis points. It didn't materialize, and I don't think it will anytime soon, because in the case of our second bond, it was again the same case. We paid the new issue premium as if we issued a regular euro bond at that time. Of course, the benefits for us as a debt manager is a further diversification of the investor base. There are dedicated accounts that can buy only green bonds or ESG bonds, and so the allocation here was key. In this case, our first bond, 61% of the bonds were allocated to dedicated green accounts. The geographical diversification was quite similar to our regular euro bonds, maybe with higher participation of Benelux and Nordics. So this is what we might be expecting at that time. Let me skip quickly to the second green bond. The second was priced in February. Actually, it was last day of January 2018, and it was longer pricing, as I said, again in line with our curve, and allocation to green accounts was 41% at that time. So not as high as in the case of the first bond, but still I think in line with our expectations. The demand was massive when we compare it with our regular euro bonds. So 3.25 billion, and the issuance was 1 billion. Actually, it was upsized because we were targeting at the beginning 500 to 750. Given the book of 3.25, we increased it to 1 billion. And geographical distribution, as you can see, is even more granular than in the first case. So I'm watching the countdown timer in front of me, so let me move to what I promised to say a few words about, so the reporting. reporting. We've published so far one report about the first bond we issued. According to the framework, we shall publish the reports within 12 months after issuance, and we published the one obviously in December 2017. As you can see, the majority of the funds were of the green bond proceeds were spent on three sectors. So it's clean transportation, renewable energy, and agriculture, sustainable agriculture operations, so organic farming, some subsidies to organic farming, etc. And in the framework, we promised to present environmental impact as much as we can. So whenever we have a data on what sector we have a data, on what project we have a data, we will show everything we have. But we also we are aware that it's not perfect. So we are still in the process of or thinking how to improve it. So the first thing, we are now in the process of establishing a working group within the ministries of the specialists, and also including some external expert to prepare a methodology, dedicated methodology if any data are not yet available, if something is not yet counted by the Ministry of Environment or the Ministry of Energy. So this group is supposed to prepare the methodology, and we are probably within, for the next, not the second, but for the following reports, we will be able to show more and more data and on the actual environmental impact, which I think is a key for investors. And it was also, this thinking was also confirmed by the Moody's assessment we had in June 2016. Moody's verified both our bonds. They have their own methodology. They assigned them GB2, so very good assessment. It was not the second highest. It wasn't the highest exactly because of the not full reporting. So I think I'll stop here, and I'll be happy to answer any questions if you may have.
Thank you, Robert. What you were mentioning in the first slide is, some of the requirements for a green bond. So when you issue a green bond, you issue it just like any other normal bond, but then you have some additional requirements wherein you have to put a framework together. And basically the framework shows or tells investors how you are issuing the green bond, right? And the international standards, basically the green bond principles tell you that, you have to meet, 4 specific requirements. And in the sense that you have to explain, how your projects are green, what is the criteria and how you are selecting those projects, and how you will be earmarking the funds or the proceeds of the green bond, for those eligible projects, and how you are going to manage and track the proceeds of the project. And then finally, you have to report back to investors on those projects. So you were talking about all those processes, how you went through. So it would be very interesting to hear, how these interministerial, collaborations worked. But before we, and also, you said that you did not expect any pricing benefits, and yet you issued the green bond. So it would also be interesting to hear what your motivations were. But before we go that, let's hear from Chris Kamenker of SEB, what their outlook of the green bond market is. SEB actually, for some of you may know that the World Bank issued the first labeled green bond in 2008, and SEB was the investment bank that worked with the World Bank to develop the green bond product. So we are very privileged to have Chris here with us.
Well, thank you very much indeed, and it is my privilege to be here today with such a distinguished audience as well. And if I could just have my slides, then we can get right on to the presentation, because what you will see is that Thank you, Farah, for that note. Here it is. Here's the first green bond, first labeled green bond for mainstream institutional investors, and we're celebrating together a decade of green bonds this November. You can see that actually we placed it with a number of Swedish investors that actually wanted to have their names associated with the transaction. This is actually something that we see quite frequently in the green bond market. Investors actually want to publicize the fact that they're doing this. So in any case, it's a privilege to be talking at this conference today, and you've done so much, and the IFC as well, and now working on sustainable development bonds. So this is great to see. But what has happened in the market since then? Well, if we just sort of jump forward to 2010, you can see on the left-hand side here, this is green bond issuance on an annual basis, but broken out by who is issuing these green bonds. And so you can see that the market has indeed grown in this almost exponential way. What is happening this year is we're on track for, we've had about $120 billion of issuance, and our view is we're on track for another very good year. It doesn't look like it's going to double again, nor should we necessarily want that to happen. I mean, more green bonds are probably a really good thing. There are also sustainability bonds, there are social bonds. There are a lot of things happening in this market, but we think that if we have a really strong issuance in November and December, we could probably exceed the $173 billion of issuance. There are a couple of names that have come out into the market recently that have published very ambitious green bond programs. We just saw a very large Chinese bank have approval from the PBOC for over 10 billion of issuance. Hong Kong has also exactly a 12 billion program. So there's plenty in the pipeline. But what I wanted to draw your attention to much more is the right-hand chart there, which takes the left-hand chart and splits it out by a percentage share. And you can see really in dark blue there, well, first of all, the SSA segment is still an important part of the market. It's about a third of the market today, but a market that started from supranationals, as you can see there, has given way over time to a very prominent corporate bond market. We split corporate bonds for this purposes between financials and non-financial corporates. And it's grown every year. It's gotten more interesting in terms of who's issuing. I sometimes like to say that corporates, all the way from Apple all the way to Vasakronan, have issued across the alphabet. Vasakronan was the first corporate green bond issuer in Sweden, and we just helped them to launch the first green commercial paper. So that was one of the last parts of the debt capital markets that hadn't been touched by this green framework, if you will. Plenty of other structures in there. You can see that most of the market, I would say 85, perhaps 90% of the market is use of proceeds. Green bonds is what Poland issued, what the World Bank has issued. But you do have this asset level green bond market that has emerged as well. These are project bonds, they're securitizations. Fannie Mae is the largest green bond issuer on the planet, basically, and the largest last year. They put out $27 billion of green mortgage-backed securities. So you have a diversification of instruments in this market. You have more exotic or shall I say more geographically specific instruments. You have Schuldscheine, you have green Schuldscheine, you have green covered bonds, which have emerged strongly this year from the banking sector. And you've got other types of structured products. So it's quite a diverse market, very similar to the overall bond market in terms of who's issuing. I would also note, of course, in green, this is the topic of conversation here, it's the emergence of sovereigns as a class of green bond issuer there. You can see that we're on target for around $30 billion of sovereign green bond issuance cumulative this year. So far, I've cataloged about 17 billion. There have been 8 countries since Poland. France has the largest sovereign green bond out there. They keep on tapping it. I think, is anyone here from Ireland? The latest green bond issuer the other week. So there have been 8 and a handful of emerging markets, green bond sovereigns that I think the World Bank and IFC have worked with. We've got Indonesia, Fiji. Indonesia, I think, is a green. Nigeria. So it's not just an OECD economy aspect. Since the topic is also about thematic bonds, I think it's worth paying attention a little bit to what other themes are this use of proceeds concept being applied to. So you can see the green bond principles established there in 2014. The World Bank is a member of the EXCOM. I represent SEB on the executive committee. It's a very diverse community. We have very comprehensive discussions about almost every aspect of the market. How can we improve the green integrity of this market? What can we do to monitor what's happening in the market and be responsive and provide some guidance? Of course, these days it's hard to talk about a green bond market as one singular entity. There's a regulated green bond market. It's China. China has done an extraordinary job in, as you know, greening the financial system there. There's a 14-principle cross-financial system framework in place, and green bonds are a fundamental part of that. We've seen about $30 billion of green bond issuance from Chinese domiciled entities on a moving 12-month basis, right? So just if you take 1 year of cumulative issuance, it sticks around $30 billion. And but you do have other themes. And here you can see last year in the Executive Committee of the Green Bond Principles, we put out social bond principles and sustainability bond guidelines. And you can see what's happened here is that those two other types of thematic bonds have taken off in issuance really last year and have continued very strongly this year. We're probably going to have double as much social bond and sustainability bond issuance this year as last year. And that may also be a feature in the market, perhaps leveling out a little bit this year. Issuers trying to take stock of what other opportunities are out there, how to go about doing that. Investors, the demand just continues to increase, and we do see a very good diversification across issuer types, including these theme bonds. There are other theme bonds out there. There are sustainable development bonds. The World Bank is a pioneer in that space, communicating around specific SDGs, sustainable cities, water. That's been very popular with investors to be able to highlight a specific SDG that they want to show that they're funding. So we also have some blue bonds. So we have some coral reef bonds, adaptation bonds. So there are a number of other themes out there. This is a picture of the green bond market. If you visualize it on the Bloomberg terminal, you can look at it on a yield to maturity perspective. I wouldn't pay too much attention to the yield figures because they're a mix of currencies, lots of different currencies in this chart. But each dot is a bond, right? So it's an interesting chart to look at. There are a couple of ones labeled there. I like to think that there's actually a very simplistic takeaway from this picture. If you put it in front of a child, you know, a child would recognize that it's a very colorful chart. And of course, it's color-coded by sector of issuer, the most granular level of BICS level 4. And so that's an interesting takeaway that so many different sectors of the economy are finding that they have green use of proceeds on their balance sheets. That's what's happened here. You have issuers from the forestry and paper sector all the way to consumer electronics seeing that they have, yes, renewable energy on their balance sheets. They've got perhaps a green building. We've seen a number of different real estate issuers, but also the Mexico Airport Trust, for instance, financing a green airport. We can discuss, you know, that and other different green bond transactions like that. We see a lot of issuers finding a green building and including that in their framework. That's a growing area. We also see a lot of sustainable transportation, electric vehicle deployment, low carbon transit, etc., light rail. We see another category growing very quickly to water, sustainable water and water management. But if you just go back quickly, you can see that there are actually a couple of yield curves that have been built across that chart. And the blue one there, those are Malaysian issuers. And maybe you'd want to say a few words about what's happening there. That's Green Sukuk. You've also got a couple of others. And the market is quite long dated in corporates and governments out to the 30-year mark. If you were to look at the municipal market, it's out to 100 years. There's a century bond from DC Water out there. And Ørsted has a perpetual, it's quite a mix. Currencies is also quite diverse, and I'll just sort of give you a view of what's happening with currencies. It can be interesting to look at the green share of all bond issuance in a currency. And here you can see one stands out, perhaps, that's Swedish kroner. In our home currency, we've had over 6% of all SEK issuance. That's government issuance. That's foreign domiciled entities issuing in SEK is in green format. And this year it was, in the first half of the year, it was over 16%. So that's a very high level, and we can discuss why that might be. It's also a very small currency, so it's easier to get to a high level of percentage in a small currency, right? But you can see for US dollars that it's scraping. It's about to get to the 0.1% mark. Euros is more at 1% of all euro issuance is green. But if you look at specific sectors like European utilities issuance, that's closer to 20% is green. So you get a diversity. Sometimes you see Aussie dollars go through the roof, perhaps. People find interesting funding arbitrage, funding opportunities in certain currencies, and they go after that, I suppose, until it goes away. And so why is the green bond market growing? In the last few minutes here, I'll just give you a few thoughts about how we approach trying to understand this market and the growth of this market. And if you're going to take away one thing from my presentation, I'd very much like it to be that we don't think it's just one aspect that's driving the growth of this market. It's actually, we would argue, quite a few different forces that are putting pressure on investors to look for more sustainable assets. It's beneficiaries that are putting pressure on asset owners, who are putting pressure on asset managers, who are looking to issuers for information on use of proceeds to feed back along that chain. So it's economic forces, cost down curves in the renewable energy sector. It's policy-related forces. The European Commission is very much focused on sustainable finance these days. I think many people know about what's happening there. It can also be green bond specific policy forces, countries putting in place specific policies to support or incentivize that. So what we would argue, of course, environmental and biophysical stress, that's impossible to ignore. The IPCC just came out with a frankly astounding report on the state of the environmental and biophysical situation. But it's quite a few things. And actually some of these forces act together. They feed on each other, or they put pressure on other ones. So this is kind of our framework of thinking about it. And I'd just conclude really with talking about what the ratings agencies are doing. I don't know, do we have anybody from S&P or Moody's here? Ah, okay, from which firm? Okay, well, perhaps you'd like to speak to this chart more than me, but I just, I did want to flag that we heard about some of the products that ratings agencies are offering for green bonds, but there is a larger discussion going on about the integration of ESG factors into fixed income markets more broadly. This is a fascinating study. I'm not trying to flatter you. I'm just saying this is a very important study that investors are paying attention to. You've gone through a lot. It's a look-back study, right? You've gone through a lot of ratings actions, and you've found where environment and climate risks are material. And sometimes they factor into the ratings decision, and sometimes they are the factor that drives the ratings decision. So. Fantastic. Perhaps you'd like to offer a comment on that after the next slide. And I'm sorry, the next slide's Moody's. But good balance, This is a study that, again, just came out from Moody's, looking sort of at that rated universe, and they've identified over $2 trillion of rated debt where environment risks are already ratings relevant or will be in the coming years. I think it's in the moderate risk sector that sovereign issuers appear, but they are looking at this. So the reason I bring this up is because this is very much on the radar screen of investors. Investors are reading this stuff. They're asking questions about it. They're trying to figure out who's exposed to environment and climate related risks. And for us, a green bond is, we know we're a green bond issuer, we're a green bond investor and an underwriter. We know that investors see the green bond as a way to signal that there is some type of a discussion being had at the parent level entity about these factors, about downside risk and about business opportunity positioning. So I'll end on that remark and cede the last 10 seconds to the chair. Thank you.
Thank you, Chris. As you mentioned, there are a lot of investors out there who are very, very interested in, SRI-focused investments or ESG-focused investments, and the green bond offers them an opportunity to invest in this type of projects that their beneficiaries are asking for or asking them to do. And that is one of the reasons why we're seeing such a proliferation of green bonds, despite very little sign or some sign, I guess, of pricing benefit of green bonds. But from green, we'll move over to CAT. So earlier this year, the World Bank launched a $1 billion catastrophe bond to cover the 4 member nations of $1.3 billion catastrophe bond to cover the 4 member nations of the Pacific Alliance trade bloc in Latin America. And Peru was one of those 4 countries. And we'd like Jose to tell us all about that transaction.
Thank you. Hello, everyone. I want to start saying a disclaimer. My apologies for my bad English pronunciation. I will try to speak the best as possible. So, Sayed, thanks World Bank for the invitation. It is a pleasure to be here. I would like to start this presentation about the Pacific Alliance cat bond, talking about the specific experience of a Peruvian case. In Peruvian case, the risk management framework for natural disasters in Peru is managed basically through traditional instruments called retention instruments. For example, credit contingency lines, fiscal stabilization funds. As you should know, we have savings of the last super cycle of commodities in Latin America, and we use that funds to cover, to hedge some natural disasters. And obviously, we have budget reallocations. No? On the other hand, now we have transfer instruments, because we did at the beginning of this year our first catastrophic bond with the Pacific Alliance, no? With Mexico, Chile, Colombia, and obviously Peru. The traditional instruments were used basically for natural disasters with high frequency and low impact. And now we are thinking these cat bonds for disasters with low frequency but high impact. Why we choose a cat bond in the Pacific Alliance? Because why we choose an earthquake event for the cat bond? Because obviously in Latin America and specifically in the Pacific Alliance countries, we have a common event of natural disaster, no? Earthquake event. So the idea is try to hedge this natural disaster through insurance contract with, in this case, with World Bank, through or transferring the risk, the disaster risk, through a bond market instrument. The cat bond, in this case, is one of several instruments used to cover potential loss caused by a severe earthquake. No? Issuing a cat bond with the countries of the Pacific Alliance reduce premiums and structuring costs too. That's very important for us. And maybe it's important to say that in Peru, the debt strategy is very committed in increasing and improving liquidity of local debt capital markets. During the last years, we were very successful increasing the portion of local currency of soles in total debt portfolio. So we have a trade-off when we are thinking to issue a cat bond in foreign currency, basically in dollar currency, no? But we can include that kind of instruments in our debt strategy, but we have a good problem for outstanding in this kind of instruments. We don't have many financing needs in our debt strategy, but we need to hedge this kind of natural disasters, like an earthquake. Recently, 2 years ago, we had an important event of natural disaster, the flooding in Peru, called Fenómeno del Niño. And for example, we need for the reconstruction of infrastructure in Peru around $6 billion equivalent in soles during the next 3 years. Obviously, we have sources of financing to this kind of disasters, traditional sources, but this instrument permit us diversify our debt, our instruments for natural disasters for contingency risks. The cat bond operativity, as you can see, Pacific Alliance countries sign an insurance contract and they pay an insurance premium to the World Bank. Then the World Bank transfer risk for international investors issuing a cat bond, no? And the bond coupon include the premium paid back by the Pacific Alliance countries. So if during the hedge period an earthquake occurs with a magnitude equal or greater than definite, World Bank will pay the country the hedge amount that comes from initial money paid by investors. So the risk for investors is that they can lose the nominal, the face value of that bond. Maybe I would like to say some characteristics of the Pacific Alliance cat bond. We issued this bond, this instrument on February of this year. We had a high demand, around $2.5 billion, from more than 45 global investors' accounts. And we allocated many countries' tranches, no? Peru allocated $200 million, Chile $500 million, Colombia $400 million, and Mexico 2 tranches, $160 million and $100 million, because of the tranches had different triggers, as I will be explained in the next slides. It's very important the amount we allocated, $1.3 billion, and is the largest cat bond executed by the IBRD of the World Bank Group, no? The most important deal in Latin America of a cat bond, and the second in the history of the cat bonds. It's very important to say that Mexico did many deals of this kind of instruments, cat bonds, before this deal. No, they like to innovate in the capital markets. No, In the specific case of Peru, the principal characteristics are the insured entity, basically, obviously, Republic of Peru, the insurer, the IBRD, World Bank, the insured risk, earthquake event, the coverage period, the bond has 3 years, the insured amount, $200 million in the Peruvian case. The payment function, this payment function has 3 levels, 1 level for each year. It pays 30% of face value of the bond in the first year, 70% in the second year, and 100% in the year 3. No, the interest rate of the bond was 6%, and the trigger type is cut in the grid. The final coupon was 175 basis points below the IPTs in the first moment, and the final allocation, $200 million. Obviously, it was 3 times the offer amount, around $600 million. It's important to explain that we have to define in a first moment boxes along the national territory. It's very important to define these boxes because of each country and each place in the same country too has different levels of triggers. Okay, for example, we can see in the slide that we have an earthquake around 6.2 degrees of magnitude, no, with epicenter in the red point. So we have 3 triggers for that box, no? The trigger 1, if the earthquake is equal or greater than, say, 7 degrees in the Richter scale, World Bank pays 30% of insured amount of $200 million in the case of Peru. We have, obviously, if the earthquake is greater or equal than 7.3 degrees, they pay 70%, and the trigger 3 is if the earthquake is greater or equal than 7.5 degrees, no? 100% of insured amount. So this is a very important instrument for us, and it was a real milestone for us, issue this bond at the beginning of February. As I mentioned before, the trigger design is cutting the grid, no? Each box has assigned an earthquake magnitude trigger for each payment function, 3 per box in the case of Peru, and the hedge is activated when an earthquake occurs in the box, place and depth of epicenter, with equal or greater magnitude than triggers. Maybe I would like to say that after the deal, some blog journalist called me by phone to talk about this deal, and I said there that it was a real milestone for us, that benefits for us in case of natural disasters. And they were very, very quiet, very, very happy with the transaction. But after 2 days, they published Mr. Jose Olivares, Director of Financial Markets Management, is betting the fiscal resources on natural disasters, no? So it's very important to educate our politics, our blog journalists, to continue with this kind of instruments. We have a small portion of our total debt portfolio or our total budget in this kind of instruments. For example, the premium in the budget, it's only $40 million, and it's our first bond, but we need to educate about this kind of instruments, and we consider that it's a very important instrument in the future to cover natural disasters. No, as someone mentioned, after the deal too, all is management. Management is all. You can do your bets. Well, thank you very much.
Thank you very much, Jose. So it's very interesting that you mentioned that you use a variety of traditional instruments as well as this new instrument in order to transfer the risk of natural disasters. So it's not just about using one big innovative risk transfer instrument, but a variety in order to cover different types of risks. That's what Peru is doing. So I'm going to open the floor for Q&A. And since I am the moderator here, I would like to ask the first question, if you don't mind. And my question will be to Robert. So it's, as I mentioned before, it's very interesting that you mentioned the price benefits, that you were not expecting any, and yet you were motivated to issue a green bond. So what exactly was the motivation behind that?
Well, so there were a couple of reasons behind it. Well, one, you've seen the chart shown by Chris showing how the market will grow. So obviously we want to be a part of this market. This is directly linked to our debt management strategy, how we approach different market segments. The second, this is the explicit goal of our debt management strategy, to broaden the investor base. So since this community is growing massively, we decided to go ahead with this bond. And the third, I think, reason, it was not so much related to our debt management strategy. It was on a different layer, let's say. It was to start, and we succeeded in it, to start a discussion, let's say, about this instrument within the country, to motivate local governments or the companies, including the big state-owned companies in energy sectors and others, maybe to get interested in this topic. So, and it happened. There are still discussions. We also met with many of those institutions and showed them what we did, how we did it. Of course, this is a completely different story in case of corporate issuance or the sovereign issuance. But well, we really hope that issuance from other issuers inside the country will follow. And
61% diversification is excellent, right? And also in terms of oversubscription, it was very high as well for both of the Polish bonds. You mentioned that reporting was particularly challenging. So, and we understand that, someone has to take the lead when it comes to issuing the green bond. And it's usually the debt management offices, it's usually the Treasury that does that. But then you have to work very closely with the environmental ministries. So how was your experience with that? Because in many of the countries, especially the emerging market countries that we've worked in, we've seen that the coordination between the different ministries is very, very difficult.
Yeah. So at the beginning it was quite tough, actually, because you approach various ministries and you want something from them. You want them to do additional work, and they don't see it why and what for. So it was difficult at the beginning. But as I said, we have this dedicated department inside the Ministry of Finance that tracks exactly the expenditures of Ministry of Energy, of Ministry of Environment, of Agriculture, etc. So it helped a lot. And after the first issuance, when it was very successful, and there was a massive coverage in the press, etc., and prime minister was bragging about it. So, and suddenly all of them want to be a part of this project. So it's now much simpler.
The signaling and the demonstration. So all the emerging market countries that we are working with, we are actually encouraging them to set up this multi-departmental working groups, green bond working groups or steering committees with focal points from each of the ministries. Is that something that Poland did?
Well, we're in the middle of establishing such a working group now, and we hope it should be. I think we should start maybe within few weeks or maybe months, and to make it even I think to make some rigid framework how it works, because so far it was a kind of, let's say, a loose relationship. So basically we're asking them for data, they were providing data. Now we want it to be, let's say, a constant exercise, or permanent tracking of projects, funds, environmental impact, regardless of when we do the issuance.
Thank you, Robert. And Chris, so, if there is so much demand, why are we not seeing, tighter pricing for green bonds?
Right. So we usually get onto this topic in any green bond panel. But I think it's worthwhile going back a little bit to the beginning and how this instrument was designed. And the main design feature there was to appeal to mainstream institutional investor capital. It's really the fiduciary mandates that this is designed to target. I think that's one of the main reasons why it has been successful in expanding, not into the trillions, but we're at $500 billion of cumulative issuance now. And the reason is because, as much as fixed income investors might want to invest in renewable energy project equity, they're not going to do that. They're going to invest in bonds and fixed income instruments, and it's about giving an opportunity for the $60 trillion of fixed income managers out there, 98% of which are managed on a fiduciary basis, an opportunity to fund green projects and activities, which is very hard for them to do otherwise. Yes, they can buy pure play renewable energy company bonds, but that's a pretty small universe. So when you look at, questions about are people getting material price benefits or not, I'm not sure that it's, first of all, it's an important question to ask. It's a key question to ask, but I really don't think that's why people go about issuing green bonds. And we just heard it very eloquently before. There are a number of other reasons why issuers go about putting in place a green framework. A lot of them have to do with communication and dialogue. I think, again, that was part of the original plan there, was to be able to communicate with investors, to have a dialogue with investors around topics like climate-related risk, opportunities. And I think what we've seen there is a pretty subtle benefit, very, very subtle. It flies below the radar screen, but Christopher Flensborg, who's our head of sustainable finance, who worked with the World Bank 10 years ago, he talks a lot about mobilizing human capital. And this is one thing that we really need to deal with, to finance the low carbon transition. It's going to take people, it's going to take innovation, it's going to take ideas. And the green bond, if you argue everything else against it, one thing is certainly true: it mobilizes human capital. It really does. You need to, it connects the funding side of an organization to the project side. It creates that line of communication, and then that line of communication extends out to investors. And it's on the road show. It's part of the ongoing communication with investors, new investors. I think that's also one of the places where investor-based diversification comes from. You have a lot of dedicated green investors. SEB is both a dedicated green investor. We have a green bond fund that retail investors and institutional investors say, I want to invest in that green bond fund. So it only invests in green bonds. And then we invest out of our liquidity portfolio. We invest out of our mainstream portfolios. And the reason we're able to do that is because in most cases, green bonds the credit risk is the same. It's a use of proceed bond, and so the pricing, the arguments for a pricing differential are based on that on that fact that the credit risk is the same. And so it's quite hard to argue for a meaningful pricing differential. Having said that, with a lot of oversubscription, with a lot of demand, yes, we see better execution. That is pretty routine, you know, pricing at the tighter end of guidance, sometimes a no new issue premium. And in certain markets, you can see a greenium. You see that in some places where their green bonds are subsidized, regulated markets. There's one country out there in particular. So I think that's sort of the canvas of what we're discussing here.
And what about secondary market liquidity? How are you seeing it for green bonds?
So, and that's a different part of the question. We've been talking mostly about primary issuance and what happens there. In the secondary market, one has to remember that it grew from a pretty small place. For a long time, it was a small market. Now we're getting into the $500 billion. You know, we're getting sovereign issuers we have repeat issuers coming to market. The liquidity has always been there on the bid side. You know, if you want to sell a green bond, you will find investors. They don't trade much in the past. You have a lot of buy and hold investors in this market. So there can be the illusion sometimes of illiquidity. But look, I mean, if you're on the Bloomberg terminal, go to Imager, right? Just go into FIW and then go into Imager, and you can see the dealer runs on all the green bonds that are out there. SRCH, green, advertisement for Bloomberg here. But you can do that. You can see the green bond universe and then go to Imager, and you can see how many quotes there are by the dealers on green bonds, and you know, almost all dealers are quoting certain green bonds, like the French sovereign, some large utility bonds, and you can see 25 they're green specific dealer runs, but a lot of this is new. In the last 2 years, we've seen a proliferation of indices, right? And so we can now look at what does the Bloomberg MSCI Green Bond Index, how does it perform? This last year, it has outperformed its reference index. I wouldn't read too much into that. It's a different sectoral composition. But with more development, more maturity of the market, we're seeing more market infrastructure come into place. The ratings agencies, the indices, and the ETFs now. Seeing passive investment opportunities, investment bank sell-side coverage. So getting more liquid, I would say, yeah.
Thank you, Jose. And Jose, now over to you. So what was, your motivation for buying this disaster risk insurance for earthquakes rather than floods? Because you mentioned that a couple of years ago you had a massive flood, but you decided to go for earthquake rather than flood.
Well, the main motivation is basically diversify the kind of instruments, in this case, transfer instruments for natural disasters. As I mentioned before, we have a strategy, a transparent and very commitment debt strategy with established fiscal rules in our multi-annual macroeconomic framework. So in this way, we have a commitment, for example, with rating agencies to have a debt GDP ratio below 30% of GDP. So when we use this kind of instruments, we are not issuing in the international markets. We are not increasing the debt stock of the Republic of Peru. So it's a win-win situation because we continue manage our debt GDP ratio below our commitments with rating agencies, and we are going each week to local markets to increasing the portion of soles in total debt portfolio. So we don't have to issue in dollar bonds for this kind of instruments. Obviously, we have a cost. We have a budget expenses, no, approved in the law of Peru, in the indebtedness law. But we think that it's necessary for us, obviously. It's important to say that now we are including in the law a new framework for other kind of natural disasters. For example, you mentioned before flooding. No, that event has had an important impact in our economy. So we expect in the next years, maybe in the future, when we get our target of solarization in local currency, we have a percentage of total debt portfolio in local currency around 60%, below our peers in the Pacific Alliance, for example. And we have a target around between 70 and 80% of total debt portfolio. Maybe when we get that target in the future, it will be the possibility to issue a direct bond, a direct catastrophic bond in the international markets, and we hope that deal will be in local currency for us.
Thank you, Jose. And what was the impact of this issuance on the fiscal impact of this issuance?
Well, we don't have any fiscal impact because of, I mentioned before, that premium amount was in the budget law approved the last year, and it's a small amount, only $40 million, so we don't have any fiscal impact. But obviously, as you know, we have important fiscal impact when natural disasters occur, like flooding. No, in that case, for example, 3 years ago, our fiscal stabilization fund, no savings of the last supercycle of commodities, was around $9.2 billion in the asset side of our balance sheet, but because of flooding, we were using that funds, and now that fund has $6.4 billion. So it has reduced during the last 2 years. For that reason, it's important, that kind of instruments.
And, rating agencies like S&P are now also looking at the fiscal impact of natural disasters, right, on countries, how they impact the creditworthiness of countries. So this type of risk transfer, transactions or insurance is important.
Yeah, of course. Well, we don't have a crystal ball for natural disasters, obviously, but for example, in the case of Peru, natural disasters is important, but I do a parenthesis. We are the only country in the Pacific Alliance that rating agencies have not affected in its rating credit, no, in credit rating. Neither outlook, for example, because of we have strong macroeconomic fundamentals, as you know, high reserve, leading economic growth, low inflation, low country risk, and now we have a more liquid market, local market for bonds. But obviously, like a prevention instrument, it's very important for us work with this kind of instruments in the future, now and in the future.
Thank you. And now the floor is open for you to ask questions. Please use the mics on your tables. I asked all the questions.
Yeah, thank you. Please, I want to find out again, I didn't understand exactly from the guy from Peru, the consequences of these issues on debt analysis. I want to know, is it taken into consideration in your debt sustainability analysis or not? Thank you.
This is not an issue. The World Bank is the part that issued the bond. we have an insurance contract. But it's a very small insurance contract. It's a very low, very small budget in our law, only $40 million. So we don't see any fiscal impact in our debt portfolio or in our fiscal deficit too, obviously. Recently, during the last 2 weeks, for example, we reduced our forecast for fiscal deficit for this year. The last forecast was 3.5% of GDP, now is 3% of GDP, for example.
Please use your mic.
Okay, thanks. Just a follow-up on that question. So what informs the premiums that you are paying to a bank? Because at the end of the day, depending on the previous or historic impacts of a particular disaster, that can have an influence in terms of premium that you are paying and also have implication in terms to your fiscals. So what are the factors which you take into consideration for the premium that's being paid?
Well, of course, you have reason. This is a natural disaster very common in the countries of Pacific Alliance. We have a lot of data to create models to evaluate the probabilities. During the last years, we were very lucky with natural disasters. Only flooding, well, flooding is there, but they don't affect it, or they didn't have many impact in our fiscal deficit. Obviously, for example, in 2016, the impact of flooding in the debt, in the GDP was almost 1% in that year. No, so then we growed around 2.5%. No, it's very difficult to include the impact in our forecast of economic growth. No, we have many stakeholders who are doing forecasts about the economic growth of Peru. For example, recently we changed, for example, for this year, the economic growth for 2018 at a 4% level for this year. The last level was 3.5%, but for example, IMF calculated 4.2% for this year. No, it's very difficult to include that metrics of natural disasters in our forecast and in our fiscal deficit, but it's a contingency that we have to manage with this kind of instruments.
Chris, you mentioned that China has a rather well-regulated system for green bonds. So if you could tell us a little bit more about what China has been doing and what was the motivation behind it?
First, out of respect, I'd like to offer anybody from China the opportunity to comment before me. Yes, sir, would you like to say a word?
Yes, China a company issued a lot of the green bond, but China government haven't issued the green bond. In China, it's doing a lot of things and make policy to encourage company to protect the environment. So if the company issue bond to finance the environment protect project, we will encourage their behavior. And the central bank, central bank also have some policies to give their they're more easy condition to issue bonds.
Thank you. I think that encapsulates the state of play very well. I'll just offer a few other observations. I think that it's interesting to look in the statistics. You can see the share of issuance. You know, in 2015, what happened was actually a little bit before this. I think we had the 5-year plan, which brought in the theme of ecological civilization, and I think it was Dr. Ma Jun in the PBOC who started looking at how much investment capital it would require to finance the 5-year plan associated with green economic development, and the sum was quite large. I was honored to be a member of the G20 Green Finance Study Group when I worked for the OECD, and that was co-chaired by China and by the PBOC and the Bank of England in 2015. And this was the first time, I think, that green finance really made an appearance at the G20 in that format. And you can look at the synthesis report from the Green Finance Study Group. A lot of that language made its way into the communique that was issued by finance ministers and central bank governors that year. And it's interesting to look at the genesis there, because a lot of it came from a domestic analysis of what is the role of the financial sector, how can it contribute to a green finance system. And I think, sir, what you were also alluding to was the 14 principle across many different ministries that examine how a green financial system can be created. This is unique. I'm not aware of other countries that have really gone across a financial system like that. The European Commission has that ambition, it seems. I'm not sure if there's anyone here from the EC or who wants to talk about that. But under the Sustainable Finance Action Plan, which is very much the focus of a lot of policymaker attention in Europe right now, there are similar ambitions to look at a taxonomy. How do you define what counts as sustainable investments or green investments? China already has that in place. There is a proposal for an EU green bond standard linked to the taxonomy. But the taxonomy is wider than that. It's about sustainable finance across asset classes. It's about green equities, green funds. It's about indices. So there's a working group looking at benchmark indices. We actually have a member on the technical expert group, which is working to design the EU Green Bond Standard, the taxonomy, and there is an aspect also, as the gentleman mentioned, on disclosures underway now, so climate-related financial disclosures. And that's a theme that has, I think, been very much, in my mind at least, but the Financial Stability Board put forward the task force on climate-related financial disclosures also in 2015. That was a pretty big year for all of us. You had the Paris Agreement, you had the UN Sustainable Development Goals, you had the China presidency of the G20 with green finance as a big theme. And so I think, that's sort of where the conversation is now. There are plenty of other countries that have been looking at what type of incentives to put in place. The United Nations Environment Program has this great report which looks at how policymakers have been encoding sustainable finance into the DNA, really, of the financial system in different ways, sometimes focused at the banking sector, sometimes focused at securities, sometimes focused more at the risk level, the Banque de France, the Bank of England, the Dutch Central Bank are all members of this new network for greening the financial system. So China is a great case study, I think, about how others are approaching this topic.
And also, I think the Chinese government's desire to take a leadership position in terms of climate actions and climate solutions drove much of this. And they went from $0 to $36 billion of issuances in 1 year, so which is a massive feat, and really drove the emerging market green bond issuances, really kick-started it. Yes.
I have a question to Robert. So first, I suppose that congratulations for your experience with the green bonds. I suppose that it was a very important challenge to coordinate with different ministries and to select the projects. And also to obtain the certification, then the report that you have to deliver. But my question is regarding the project that you selected. It was a project that you have already planned to execute, or it was a new project that you have with these green bonds available to implement?
Yes, this is a very good question. Well, the projects were already in the budget, because since the sovereign green bonds within the legal framework, we are basically financing the needs of the state budget, so the projects were already there. And the bond use a kind of, let's say, mainly in the vast majority as a refinancing, let's say, tool. So some of the projects have already been done, some expenditures made, and it's like 3/4 of the first issuance was to cover the expenditures done earlier in the year, or actually even a year before. In the case of the second bond, it was issued at the beginning of this year, 2018, and it predominantly finances the projects that were included in the Budget Act for 2018. So as they are moving forward, we are simply disbursing the funds from this dedicated green account and financing those direct budgetary expenditures. Yeah, but first there were projects, then the financing.
Question for Jose. Why did you do it through the World Bank and not directly with the insurance or reinsurance market? Was there any benefit in doing that?
Yeah, benefits, for example, from the rating of World Bank, obviously, but it's a mix of factors because of you have the triggers that depends of each country. We have another benefit that I mentioned before, because you don't have an important impact in the debt stock, in the debt GDP ratio, and in the solarization process too, because we don't have to issue $200 million. Only we have to, well, it's not small, but it's only $40 million in the budget expenses.
Yeah, Lars, Danish GMO. So being part of Scandinavia, there's a lot of green initiatives. So why don't these governments issue more green bonds, you might ask. I think one of the reasons for smaller issuers is that it's the main problem is that it probably will hurt liquidity by splitting the market in too many bonds with different market segments. That's one of the main arguments, I guess. So I think I have perhaps two questions. One is, of course, in the cat bond, you issue the bond and you have that insurance embedded, but you could also just buy the insurance outright as a derivative, basically. So I think my question to Christopher is, why is there no derivatives, green derivatives, which could overcome the problem with splitting the bonds and losing that liquidity element, which everybody is scared of losing?
And it's an excellent question. Thank you for that. And a lot of people, I think it's on a lot of people's mind. This is not just for sovereign DMOs. I think it's also for corporates, smaller corporates. Think about that too. I'm not sure that there is a definitive answer yet to offer. It's still important to bear in mind that the market's 10 years old, and we're only starting to get to bond market levels of issuance. The type of amounts that a fixed income portfolio manager will actually pay attention to. I mean, I'm trivializing it a little bit, but I think one of the ways that we've seen governments approach that, tackle that issue, is to try and make the green bond just like any other bond within the debt issuance program. I think that's the approach of Agence France Trésor. It was publicized from the beginning to sort of, they have a really big program, right? So it's that's part of it too, but we've also seen other issuers that have different debt issuance needs and programs trying to make the green bond just as similar as any other bond, and that's the way the rest of the market tries to do it, to try and make it almost indistinguishable. And you can actually see this in the statistics. If you look at who's investing in green bonds, you find, yeah, sure, dedicated green investors, and that's one of the reasons why people do it, to get that green investor base. But you have plenty of non-green investors. One study that I've looked at has, of all the outstanding issues through to mid-2017, about 40% are held by dedicated green investors, however that's defined, and 60% is held by others, you know. So why are they holding the green bonds? Well, because they come in a format, benchmark size, a maturity format, a currency format, a pricing format that is almost indistinguishable from others. So I don't know if, you know, you have two parts to your question, right? The second one is there a financial engineering approach that can be worked on? Love to have that conversation in great depth, but that's exactly what we need now in the green bond market. We need harmonization across impact reporting methodologies, and the IFIs are leading on that. The Nordic public sector issuers have also come out with a harmonization approach for how to report on water impact, transport impact in the green bond space, renewable energy. So we need work on that, and we need more innovation on the financial engineering side. What are the techniques that we can learn from the regular bond market and apply it to the green bond market? We've only just seen the first green commercial paper. We've only seen the first green structured note. A bank took the French sovereign and then, I guess, did a zero coupon or some structuring and linked it to an index. So there's some of that happening, but it's a great question.
Okay. If there are no other questions, then I would like to thank our speakers for this very interesting discussion. And I look forward to hearing more from you, those of you who are, interested in issuing either of these types of bonds. We would like to hear from you, and we would like to see how we can help. And with that, I will end today's discussions here. And there is a reception after this. Sorry? Yeah.
So the reception is in the lobby of the present auditorium where we had breakfast. So from here, just go directly to take the elevator down on to the lobby, first level, and then our colleagues will meet you up there to guide you to the area. Thank you.
Thank you very much.
Thank you.